Ladies and gentlemen, welcome back to Driven Wyld. Today we are talking about sole proprietorship, LLC, and S-Corp. So one of the most important decisions you're going to have to make as a business owner is to determine the legal and tax entities of your business. And making sure you choose the right one is going to be vitally important to saving you the most money as a gig worker or someone who's just in business for themselves. The most common 3 or really 4 or 5 entities are sole proprietorship or partnership, LLC, S-Corp, and C-Corp. So with that said, we are going over everything you must know about these entities, the major differences between each of them, and which one would be most beneficial for you as a gig worker or a business owner. But before we do that, let's go over a quick disclaimer. The content of this video does not contain, is never intended to be, legal, business, financial, tax, or health advice of any kind. This video is for entertainment purposes only. It is advised that you conduct your own research and consult qualified professionals before applying anything you find online. Also, thank you to GigTax for verifying this information and making this video possible. Legal entity versus tax entity. There are 2 types of entity type that are really important for consideration when it comes to choosing which is best for you as a gig worker. There is the legal entity, and then there is the tax entity. A legal entity is an entity in which you register with your state, and a tax entity is that you elect to file as with the IRS. You may register with the state as an LLC for legal purposes and elect to be taxed as an S-Corp with the IRS for tax purposes. However, as far as legal entities go, there is no such thing as an S-Corp. Pass-through entities and taxation. Regardless of whether you're a sole proprietor, open up an LLC or an S-Corp, or even start a business in some kind of partnership outside of normal gig work, they will all be taxed as pass-through entities. This means that all income that your business receives passes through to you personally for tax purposes. If you made $100,000 in profit and you own 100% of the business that generated that income, no matter which of these entity types you went with, you are required to pay taxes on that profit individually, not as a business. Of course, there is a difference between profit and revenue, and you have the opportunity to write off expenses before determining your actual profit. And the amount you will pay will vary based on the income tax bracket you fall in, but nevertheless, that will vary on a case-by-case basis. Double taxation. Double taxation is where the company itself is taxed on all its profits before payments to the owners are made. And when this happens, the owners themselves are taxed again on the payments that they receive from the corporation. This is exactly why I would normally say C-Corps aren't really a great choice for gig workers or other small businesses. Self-employment tax. This is the government's way of funding programs such as Social Security and Medicare, which would normally be deducted from your paycheck as an employee if you were working a W-2 job. Except as a self-employed individual, you are paying both the employer side of this and the employee side. As of the recording of this video, the self-employment tax is an extra 15.3% of your income and does not currently apply to S-Corps and C-Corps.
S-Corps are looking pretty good right about now. Why don't I just leave this video and do that instead of just listening to you talk?
Well, S-Corps are also subject to some different rules that may complicate this, but more on that later. Sole proprietors and general partnerships. In the event that you did not register your business with your state, you are considered a sole proprietor by default. And both general partnerships and sole proprietors are taxed the same, they just file differently on their tax return. So let's say you decided on a whim that you were just going to become a Doordash driver out of nowhere because you needed the extra money and said, F it, let's get to work. First of all, great initiative, keep that attitude up, but you are doing business as a sole proprietor because of that. Now, if you started to work with a friend on a business idea to hopefully transition yourself out of gig work and into something else without setting up some kind of entity, that would be considered a partnership. Also, you can't start a gig like Doordash as a partnership, but some apps will allow you to bring people along with you. They're just not going to be on the tax form, you know what I'm saying? Sole proprietors report their business income on their individual tax return or 1040, and they use Schedule C to report their income or loss from their business. Partnerships report business income on their partnership tax return or a 1065. Each partner must receive a K-1, which reports what portion of the profits they are entitled to. Both of these entities can deduct business expenses to lower their income. However, these profits are also still subject to federal income tax, state and city income tax where applicable, and of course, self-employment tax. On a legal level, both of these options, sole proprietor and partnership, are the most unattractive thing because there is a lot of substantial risks associated with these entities. For one, you have no protection over your assets. If something were to happen, heaven forbid, which can lead to some sort of lawsuit, they can come after everything you own, which is why most people opt for the latter two options. LLC. An LLC, or limited liability company, does exactly what it sounds like. It limits the liability for your company. By default, there is no extra tax benefit for registering your business as an LLC. It just adds a level of legal protection. So if something were to happen that would make you liable for a lawsuit, you wouldn't be sued, your company would be.
Can't touch me.
Which means your loss would be no greater than the amount you invested into your company, which is why it is the most popular of the small entity types among small businesses because of their strong protection and ease of setup. Now, the forms you will file will differ based on the number of members in your LLC, which for most gig workers is going to be a single member LLC. A single member LLC will file their taxes on a Schedule C, just like a sole proprietor. Alternatively, if you decide to start a business with your friend to transition yourself out of gig work, like we stated earlier, you will then be considered a multi-member LLC and file your taxes on a 1065, just like with partnerships. One of the most interesting things about LLCs is that you can elect to file your taxes as an S-Corporation to receive the tax benefits of having an S-Corporation without having to officially file as one. Speaking of S-Corporation, an S-Corporation or S-Corp is a special tax status granted by the IRS that lets corporations avoid double taxation and pass their income to their shareholders like partnerships. As we said before, an S-Corp is not a legal entity, and you must have a legal entity in order to elect S-Corp status, such as an LLC or C-Corp. For this, you must be a domestic corporation with no more than 100 shareholders to be eligible for S-Corp status. In order to elect S-Corp status, you must file a 2253 form with the IRS. If the IRS accepts it, you would file an 1120S to file as an S-Corp on your tax return. This would mean you would not be required to pay self-employment taxes, which sounds cool, but there's a major rule to consider. The owners of S-corporations must pay themselves a reasonable salary for the work they do and their business before receiving distributions of profits. This reasonable salary must be paid to you like you would pay a W-2 employee. And yes, that means you are still paying for Medicare and Social Security taxes, one way or another. Because Uncle Sam gotta get his cut somehow, right? So you would need to set up some sort of payroll system to pay yourself and submit quarterly payroll taxes. What is a reasonable salary? Now, you're also going to need to figure out how to pay yourself a reasonable salary if you are choosing to go with the S-Corp route. The IRS provides some factors in determining reasonable compensation: training and experience, duties and responsibilities, time and effort devoted to business, dividend history, payments to non-shareholder employees, timing and manner of paying bonuses to key people, what comparable businesses pay for similar services, and compensation agreements. I know this really doesn't help much in knowing what any of this even means, and if done correctly, the IRS can go back and reclassify payments as distributions as W-2 wages that you must end up paying taxes on. With that alone, that could really seem intimidating to a lot of business owners. But according to a lot of different CPAs, including Joseph Mayo from GigTax, the unofficial rule of thumb goes something like this. A reasonable salary to pay yourself is equal to 1/3 of the business profits.
Joe, I was able to write off a lot of my income with the miles I was driving and the other expenses that I incurred. And I'm not showing any profits. So how would that work?
First off, I hope you're still paying your bills and such, but nevertheless, this might get you into some trouble. The people getting caught up with the IRS aren't paying themselves at all, which isn't to act like your point is invalid, it's just concerning. A lot of people say going S-Corp immediately isn't going to be wise until you hit at least $50,000 in net profit a year with business income, because you're not going to have access to a lot of the benefits of being an S-Corp. So by setting up a reasonable salary, you will effectively limit your exposure to self-employment taxes and get reclassified against your will, which is best for you. The general consensus is this: when you are getting started, open up an LLC because of its ease of setup and protection, and work your way up to over that $50,000 of net profit a year mark, and consider electing an S-Corp status. Some of you are already there, and some aren't in a great market for that yet. However, some of you are developing an exit strategy and treating the gig economy as an income bridge to what would be a long-term goal, not the goal. And that's wise. So you would need to consider a bunch of stuff with that. However, every situation is a case-by-case scenario and vary based on your goals and values, which should really be discussed with a tax professional on what's best for you, and GigTax is here to help. The approaching tax season is inevitable, and for every hour spent on navigating tax season alone, you miss out on potential earnings, precious moments with loved ones, and expose yourself to financial risks. Recognized as the leading tax preparation services for gig workers, GigTax is dedicated to simplifying the process, saving you time, energy, and money. Founded by Joseph Mayo, a seasoned gig worker with 6,000 deliveries across 6 platforms since 2020, GigTax addresses the overlooked, overcharged, and underserved needs of gig workers in the financial realm. Driven Wyld subscribers can take advantage of an exclusive 60% discount on GigTax's tax prep, and if you act now, the first 3 registrations include complimentary tax preparation. Let me say that again, in case you didn't hear me. Professional tax prep tailored to your needs. Absolutely free! Secure your spot today with GigTax using the description link below to register and enter Wyld to maximize your savings and get back to what you do best, making the most amount of money in the least amount of time in the safest possible way. Thank you so much for watching. I really appreciate it. As always, make sure to hit the like button, subscribe if you're new, and I'll see you guys next time. Peace!